And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. Now that spot Bitcoin ETFs have successfully launched, both the ETF and the crypto world are waiting for the next big event, and that is spot Ethereum ETFs. The SEC has to approve, deny, or delay VanEck's application for a spot Ethereum ETF by May 23rd. So what's going to happen? Let's talk with Rick Edelman. He's the head of the Digital Asset Council of Financial Professionals and the former head of Edelman Financial Engines, and Matt Hogan, CIO of Bitwise Asset Management. He manages the Bitwise Bitcoin Trust. Rick, SEC has until May 23rd on Ethereum ETFs. Approve, deny, delay, what's going to happen?
They're not going to approve it. There's too little traffic between the ETF sponsors and the SEC to illustrate that they're really crossing the T's, dotting the I's. So I think that there are going to be another delay, which is frankly not really bad news, but I think anybody who's expecting this to happen in the next week or two is going to be disappointed.
You know, Matt, Rick brings up a good point here that the sort of crickets from the SEC is not a good sign. A whole bunch of companies, BlackRock, Fidelity, Grayscale, Invesco, Galaxies have applications in as well. And my understanding is several have continued to update those applications. So what do you say here, up or down from the SEC?
Yeah, I mean, I should first start by saying, of course, Bitwise has its own application in for a spot Ethereum ETF, and I can't speak to that, but I can speak to the general situation. I think, as Rick mentioned, usually what you see when ETFs are filed is a lot of back and forth as you approach the approval or disapproval date. Updates on prospectuses, changing and wording, and we haven't seen much of that. So you continue to see issuers interested in this space. That's why there's this ongoing level of discussion. But I think you see the consensus in the media from leading analysts, from Rick himself, that it's unlikely. We'll have to see what happens next week.
So when the spot Bitcoin ETFs were denied by the SEC, they were successfully sued, right, on the grounds that they had approved Bitcoin Futures ETFs, and since they were similar products, they had to approve the SEC. The SEC had to approve spot Bitcoin ETFs. They've already approved the Ethereum Futures. So isn't the same logic applicable here? It seems like there's a clear chain of events.
Well, yes and no. Yes, the Ethereum Futures are out there, but we don't have the same train of history with Ethereum Futures ETFs that we had with Bitcoin Futures ETFs. So it's giving the SEC a little bit of a different environment, but it's basically a similar animal, Bob, and so for that reason, most are expecting ultimately that these ETFs are going to come onto the market. I just don't think it's going to happen in the next 10 days.
Matt, you same opinion? I mean, is the logic still the same here? I mean, it's a slippery slope, right? They're in a tough position given what happened with the Bitcoin futures.
Yeah, I mean, look, I think we've entered the ETF era for crypto. We've seen the Bitcoin ETFs come to market. We've seen the great things they've done for investors, lowering costs, improving regulation, improving sort of safety, security, and peace of mind. I think we will get there on Ethereum as well. But as Rick said, it's not exactly apples for apples. It's two similar fruits. I think it's moving in the same direction, but it just may take a little bit longer.
So I think we're not hearing anything. So normally you'd hear these comments from the SEC, and we're hearing nothing, right? So and that's clear here. So the issue, it seems to be, is whether Ethereum is a security or a commodity. So the CFTC says it's a commodity, but the SEC's chair, Gary Gensler, seems to be implying most cryptocurrencies are securities and subject to the SEC. I want you to take a listen to a recent comment that Gensler made here.
The field of crypto assets, without prejudging any one of them, many of those tokens are securities under the law of the land as interpreted by the U.S. Supreme Court. So we follow that law. And you, the investors, are not getting the required or needed disclosures about those assets.
That was Gensler on our air last week. Mm-hmm. So the standard seems to be, as you mentioned, whether these are investment contracts. Matt, you know, are they? Is there some way for a viewer to understand what's going on here? Are these investment contracts? If they are, they're subject to the SEC, but that seems to be the issue, right?
You know, I think what everyone can agree on is that 80-year-old securities laws don't fit neatly into this world of digital assets and crypto and 21st century technology. there's a debate between the SEC on one side and the CFTC on the other side, which has said that Ethereum is a non-security commodity. What we really need is for the regulators and legislators to get together and build a regulatory framework that all crypto assets can fit in, that allow the industry to thrive here in the US. We don't need these turf wars, but it is a dispute. It's important to note that there are regulatory views on one side, regulatory views on the other, and that the courts haven't cleared that up yet. We're still in that process. Long term, I think we'll figure out the regulatory path that allows us to move forward, but there is still some debate here.
Go ahead. Matt's absolutely right, and I'll take it a step further, Bob. When Gary Gensler said here on CNBC last week that most coins and tokens are securities, well, he's right, but what he failed to articulate is which of those most are securities and which are not. And that has been what the bottleneck is all about. The SEC is refusing to stipulate exactly which coins and tokens are securities and which ones are not. And it's causing a huge consternation in the community, because the crypto community is going to the SEC saying, we would like to register as a security. And the SEC is saying, you can't because you don't meet the rules, which is causing companies like Coinbase and Robinhood to trade these coins and tokens, only to then have the SEC sue them for trading unlicensed securities. Securities that are unlicensed because the SEC wouldn't let them get a license. They wouldn't let them register. It's a ridiculous situation where the SEC isn't providing the clarity, isn't providing a path to registration, and then taking enforcement actions for those that are failing to follow the rules the SEC won't let them follow. This is what's got to stop.
So what we're seeing here, Matt, is the crypto community is mounting legal challenges finally against the SEC. What is it? How do you draw the line between all the other cryptocurrencies, ETFs? So I remember at the end of April, Consensus Software, which was, those of you who don't know, is a software developer whose business kind of centers around the Ethereum blockchain network, sued the SEC in a federal court in Texas over regulation of Ethereum. Consensus had, as Rick noticed, received a Wells notice stating that the SEC's intent to imminently recommend that Commission is going to bring an enforcement action against Consensus for violating federal securities laws. So the argument for rejecting crypto assets in an ETF becomes weaker, it seems to me, with each ETF they approve there, essentially. Matt, where does this go? Summarize what's going on with this Consensus lawsuit?
That's absolutely right. It's what Rick talked about. The SEC has not offered a way for these assets to register, and then is theoretically enforcing against them for failing to register. It's this weird catch-22. Look, again, ultimately, I think everyone wants the same thing. They want a safe, secure platform where investors are protected and innovation is protected. And we can get that if we work together with regulators and work together with legislators to move forward. I will say that crypto has done exceptionally well in the courts, whether that was the Grayscale lawsuit or the early findings in the Ripple lawsuit, some of the developments in the Coinbase lawsuit. Time and again, the courts have come down on the side of, in my view, common sense on crypto. So I think we're moving in the right direction. But look, this is a massively disruptive technology. Crypto could disrupt large chunks of the financial market, make it better in many ways. It's natural for there to be this sort of regulatory lack of clarity. We will get through it. This is just the messy process by which we do it.
And here's the worst part of it, Bob, the saddest irony of it all. On the one hand, Gary Gensler says we don't need new regulation because all the laws are in place and everybody just needs to follow those laws. Well, the absence of new regulation, the absence of new legislation, as Matt has said, is forcing us to work on regulation legislation that's a half a century old, that is predated the digital technology that we're engaged in today. The result is that in the absence of knowing whether a coin or a token is or is not legit, without any cop on the beat, it's forcing investors to go on their own outside of the investment advisory community, because the community can't help them because we don't know what the rules are. And they're ending up in scams and frauds. The FBI says 46,000 Americans lost over $1 billion to crypto frauds last year. This is because they're not getting the aid and support of the investment advisory community, which can't help because of the lack of clarity behind these rules and regulations. And this is the sad irony, is that Gensler is claiming to be wanting to protect the consumer, but his refusal to right regulation is actually harming the consumer rather than helping them.
It seems to me that the arguments for rejecting crypto assets in an ETF are becoming weaker with each ETF they approve. I mean, does this ultimately, Matt, get down to a court case? I mean, if they approve Ethereum ETFs, are they now in a slippery slope where they're going to have to start approving all the other ones, or is it going to get down to the classic Howey test and whether or not this is an investment contract? I mean,
yeah.
What does the SEC do here?
For sure. Look, again, I think we've entered the ETF era of crypto. So eventually we're going to have a large number of crypto assets, index-based crypto assets available in ETFs. And I think that will be a great thing for investors. There is a difference between Ethereum and other assets in that we have regulated futures contracts on Bitcoin and Ethereum, and we don't yet have those contracts on other assets. So there are still miles to go and work to do. But if we look abroad, Bob, if we look overseas, there are ETFs on a wide array of crypto assets. And in each case, they've helped lower cost and increase investor protections in exactly the way Rick mentioned. So I think we are going to get there. We made a big leap forward with Bitcoin ETFs. They're the most popular ETF launch of all time. People want to access this asset class through low cost and reliable ETFs. We're going to get there. And I think we're going to get there on Ethereum relatively soon. Just whether or not it's next week or not, we'll find out.
Go ahead.
Here's the really interesting thing. We don't have to answer the question, is a given coin a security or not, in order to have an ETF of it. Gold's not a security, but you've got a gold ETF. And you could have the similar path with other digital assets. So we could sidestep the question of whether or not this coin is a security by simply allowing an ETF of that coin, because the ETF is a security and would fall under securities rules, creating consumer protection in a way that they don't get by buying the coin directly. Buy it via the ETF, you now have the full force and strength of the SEC to protect investors. That itself would be a major leap forward in investor protection.
So what other arguments might the SEC use? I mean, sometimes they've argued it's not decentralized enough, for example. Is that an argument? I'm trying to think, what do they just poo-poo it and say it needs more study?
It's really hard to find justification that supports the rationale of Gary Gensler and the SEC. Pretty much everybody is opposed to the way they've been managing crypto regulation. Not only the media and the investment community, the crypto community, virtually every former SEC commissioner has been criticizing Gary Gensler for his handling of this. Members of Congress are opposed to this. There's really a hard-pressed effort to justify the SEC's behavior here.
Yeah. Matt, you mentioned that the Bitcoin ETF was the most successful ETF launch in history. That's an interesting claim, but update us on where we are right now. What's total assets under management, and parse out, of course, Grayscale's, what did they have, 27 billion initially in the whole game? Where are we at, and how is the suite of spot Bitcoin ETFs trading relative to Bitcoin?
Yeah, they're doing fantastic. They're tracking Bitcoin's price virtually perfectly. They're trading at very tight spreads, and they're charging low fees. So for investors, they're often the lowest cost, most liquid, most accurate way they have to gain access to this space. And that's really exciting. We love doing that with the Bitwise Bitcoin ETF and BITB, and our competitors do with their ETFs as well. There's maybe $50 billion in assets, north of $10 billion of net flows. Flows have restarted after taking a few days off. We're actually in a really interesting point right now, Bob, because we're getting the 13F filings, where we're seeing whether professional investors are allocating to these ETFs. Those filings are due May 15th, but they're already a large number in, and there are a huge number of really iconic firms allocating to these ETFs, well north of 500 professional investors making investments, including firms that manage money on behalf of Yale and Princeton and others, firms like Hightower Advisors. These ETFs are being adopted by professional investors. We're learning that right now. And I suspect we're going to see the inflows from that group accelerate in the second half of the year. So from any perspective, a massive success. And I think that success will continue and compound in the second half.
And it's easy to see why this is the case, Bob. Everybody loves ETFs, the most popular investment vehicle in America. They're low cost, they're highly transparent, they're very liquid, they're extremely familiar. You can put them in any brokerage account where you can dollar cost average, you can rebalance, you can do tax loss harvesting. Really easy to own and manage, easier than the complexity of Bitcoin directly. And now that they're available, everybody who has always been curious about Bitcoin or has been wanting to do Bitcoin but has found it daunting to engage, now can do so in the easiest way, most familiar way possible. And that's why we're seeing the flood of tens of billions of dollars into this.
So you said 50 billion right now, AUM, for all the Bitcoin, spot Bitcoin ETFs. Is that right, Matt?
Yeah, around there, Bob. Yep.
Okay, so we started out, well, Grayscale had 27 itself, right? Back in January, is that right? Was it 27 billion?
That's about right. And then we had some market appreciation, right? The price is up from 50 to 63. And but we have had this historic net flows, which again is just
so even with just a wide guess here, at least $5 billion a month in inflows going in just in the last 4 or 5 months. That's a pretty good number.
It's by far a record-shattering event. This is, if you compare the flows that went into GLD, which up until now was the record setter for asset flows, these ETFs have shattered the record. The amount of money that has flowed in such an incredibly short period of time demonstrates investor interest in this and the consumer buildup and the excitement behind this. And yet, as Matt has pointed out, relatively few RIA firms or institutional investors or major Fortune 500 companies have yet to participate. This is going to be coming over the next couple of years. It's going to get very exciting.
Guys, I'm going to have to leave it there. It's been fascinating as always. And Matt, let us know about those updates on May 15th. I'd love to see what kind of investors are involved, particularly if more institutional investors are. Let's keep us updated on that. That does it for this week's ETF Edge. My thanks to Rick and to Matt. We've asked Rick to stick around and give us additional thoughts on the ETF and personal finance business this year on the ETF Edge podcast. That's coming up right after the show. Remember, you can see all the shows on our website. That's etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the ETF Edge newsletter. Your weekly update on the hottest trends, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.